Welcome to Momentum Monday. Today is September 29, 2024. Howard, how do you feel after your trip in Italy?
I think it might be easier raising an infant. Yep. Speaking of infants, my dog is. It was fantastic. Thank you. How's the baby?
He's doing really well. I mean, he's screaming a lot, like sometimes during the day, but I don't know. He's trying to communicate, I guess.
All right, whip us through the markets, everybody.
Um, yeah, let's take a quick look at the indices. I mean, the main indices are after they made new all-time highs. The week before, they're in a choppy range-bound mode. For the most part, what I wanted to touch upon here is that the market is forward-looking. So ahead of the FOMC decision to cut rates, the market was expecting that rate cut. So we saw interest rates actually declining ahead of that decision. And then the day after the decision was made, about 50 basis points cut and probably a lot more in the following months, the market reversed and actually yields went up, which is a very typical buy the rumor, sell the news price action that we saw. And as the rates rallied in the past week or so, we saw weakness in small caps, in biotech, all of those highly highly interest rate sensitive sectors. I mean, by weakness, I mean they just pulled back that time entire week. And then on Friday, we got the PCE inflation numbers again below estimates, which kind of rekindled and resumed the interest rates decline. And this is when finally we saw small caps and biotech kind of bouncing. So all of those sectors, housing, regional banks, biotech, solar, small caps, they're all one big interest rate trades. They basically their move depends on interest rates. And during that week, when we saw that decline in small caps, we saw a bounce in semiconductors, especially the large cap ones, and like Nvidia and AMD, they bounced. SMH in general. Obviously, MU also had a better than expected earnings, which helped. But we're still in a rotational market that, when we see rates rise, tech is outperforming, and when we see rates drop, small caps, biotech, solar are outperforming. But overall, bullish market, just but very rotational. That's what I'm seeing pretty much. What are you seeing?
Well, I mean, I was away. I try not to trade, but I think the big move we talked about, I was speculating a little bit on China the last few months.
Oh
Not a
yeah,
big
definitely
position.
China. Yeah,
I think it's like the biggest week of all time. So that doesn't happen. That
yeah.
happens in a fair market, but this is the beginning of something new. And then we talked about it, and then Tepper came out and it was like, buy anything. Um, you know, again, can you trust China? No. If your best ideas are out of China, then you're not working hard enough. But once in a while, right? Like if we pull up Alibaba, this is whether the whether we disagree or agree on, and I'm not a fan in terms of the structure of these companies, and even if America should allow trading in these companies, considering that, but the story is set. Like this company is 6 or 7 times bigger than when it went public. So I can't say it's cheaper and expensive, but this and this the president for Life Stuff Z, is kind of, you have to assume he was buying all these shares the last 3 or 4 years the government was. And now they get to no different than they control the supply of the stock. Now they cut interest rates to keep up with the United States. Guess what benefits, right? And so if we look at K Web or Baba, or even Tencent. I mean, these are historic move. Maybe not Tencent, not historic move, but this is like WhatsApp meets Facebook of Asia, Tencent.
Oh,
Um, and so this is just if you like stock markets that and stocks going up, let's be honest, it's much easier. We're all going to be happier if you own stocks and they're going up. So this is like a perfect scenario. No one wants to own China, and the funds have been selling it for years and years. These are not bear market moves. And, these aren't bounces in a bear market anymore. This is the beginning of something else, and you can't just go randomly chase stocks. But that's bullish side. The Goldman price action continues to be incredible. I said, like my 3G portfolio, Google obviously is underperformed because of the government. But let's be honest, like OpenAI is a train wreck. I mean, I just don't think they have the technical expertise or the management expertise or the financial expertise that Google has and working with Chrome. So I still think Google's and Apple are the leaders in AI. Just people just don't see that yet. And so I think, the three Gs continues to be a thing, Goldman, Gold, and Google. And then the defense stocks look good, like Lockheed Martin, Northrop Grumman, right? Like you've been talking about the leverage ones, but like these are like, you know, been incredible stocks. I think on the risk side, what the XBI did that have a good week?
no, it pulled back, actually closed below its 50-day. And as I said, this is an interest rate trade.
Okay.
If interest rates don't resume lower, there's no way this one is breaking out and leading.
Yeah.
So
But
they need rates
they need rates,
to
but in the
decline.
meantime, the speculative fever, if you look at Robinhood, it's
Yeah,
basically
the crypto names
basically hitting
bounced.
all-time
Yeah,
highs, right? Like anybody who wanted out of this stock, we were seed investors. So, right, like anybody who wanted out is out. So, forgetting the $60 price point, this is an all-time high for the stock. So, and then you have Coinbase bouncing, you have crypto bouncing. So, speculative is out there. Um, and so it's a good market. You just got to be careful of, risk management. Um, but I think last week on Trends with Films, we said it's a shitstorm for the Bears right now because uh, everybody feels like they're underinvested. Like were 5%. It was great to be in treasuries, right?
yeah,
But now you have to reposition yourself in a rate cutting mode. So the question is, do you chase or do you wait for the pullback? Because there's going to be pullbacks, but you just don't know when. And you look at gold and the commodities like copper, they're breaking out.
yeah. I mean, obviously, copper, all the metals, so they just trade alongside
Yeah.
China. So
Yeah.
and also the casinos also
Oh, are the casinos doing well? Wow.
the same move as in China. They're basically highly correlated.
That's a huge move.
Yeah. So yeah, anything related to China, metals, casinos, Chinese stocks.
Yeah, the other breakout stock was Flutter, which is the DraftKings of the rest of the world. Um, I think it's Flutter. Yeah, had a huge breakout, pulled back a little bit, but a huge breakout. So relative strength wise versus DraftKings, it's doing much better. Look at the earnings that Flutter is going to do. What do you go back? Oh, and DraftKings is going to be finally. So they're expecting this thing to make $9 a share uh, next year. So
I mean,
yeah,
42 billion. It's not cheap.
no, no,
How
no, no.
much
These
is
are
that?
cheap, but they have kind of monopolies
20 billion.
in the sense that you can't, well, anyways. So there's speculation of continuous ramp. Now, if we go look at my portfolio, the degenerate economy, it's still the CMEs, the CBOEs, the ICE, the picks and shovels to the degeneracy have just been doing very well. CBOE and at ICE, I think, have Oh, it's pulling back actually. CBO ICE is the other one. Did the Nasdaq break out NDAQ? No.
It's
Okay, so
trending
these are
higher, obviously.
consolidating. These
Yeah.
are consolidating. I'm trying to think what else that I've been looking at that's kind of breaking out. Let me just go look. Uh, yeah, so Robinhood was interesting to me. The defense stocks. Uh, AVAB, which is a drone company, um, feels like a lot of volatility, but a good base. So
Yeah.
I think the next move will be a decisive move. And my gut is it's just going to go much higher, right? So, what's the valuation of this company? It's not even a billion, or is that
Five 5 billion.
5 billion? Yeah. So small company. Look at the earnings estimates. This thing's just a rocket ship, but not cheap. But I'm saying if you want into the defense and the drone side of the business, this is just a real business now. And a lot of volatility around here. And all the robotic stocks, Intuitive Surgical, also just had a great run. We've been talking about that forever. Pulled back a little bit, but had a great run. So I think the market's acting pretty good, but it's not every stock, which is a nice
Yeah,
thing.
it's not every stock as it's a rotational market. There's some shakeouts for impatient people. And I mean, personally, I went through a bunch of setups last Friday. I didn't see that many that interest me on the long
Yeah,
side. So I'm
I don't see that many setups.
so I'm
You've
thinking we
got to
might
be
see
in,
some chop. Yeah.
yeah, like you had to be in that China trade. It wasn't like obvious. You had to
Well,
kind of,
the only way to be in a China trade, from my perspective, is to be along co-options because how do you manage risks when you have those huge gaps? Obviously, this week they were all upside gaps, which is, positive.
but I was been in the bubble for a while, right? Where like it just looked like
Yeah.
there were sellers left. I'm saying so you had to be in it to like they're not so obvious. Like the stuff that was working, the truly like GameStop and Trump and even Tesla, like the meme stocks of old, they're not giving you exactly what you want, right? They're taking their sweet time. And in terms of GameStop, every trick they do won't help the stock, right? The market, the speculative juices have moved on. Like, they're still out there. They're just moving around.
Yeah, absolutely. As they
You
should.
can't run the
And
same playbook. You can't run the same playbook. But I think the China speculation will persist because there's a history of go there's a history, and these companies are real. The valuations and the financial may not be real, but like the growth and the user bases are real. So people are going to
many people missed that move. So obviously they're
these
waiting.
pullbacks are going to be
Yeah,
narrower at the beginning because there's
they're
so many
waiting for a
people that
pullback. Yeah.
no, but I mean you're not going to get. I'd be surprised if you get a sharp pullback because there's so many people that now are ready to pounce. So it's a tricky one.
I think
Uh,
you will get a pullback just because of
no, you
that
always get
of
pullbacks, but
that
I don't think it'll
extension,
come.
that
You
quick,
always,
fast move forward. Right now, there are many people that want to short, which obviously, they could become a fuel, for further
yeah.
upside. But if they
You're in a bear
preserve,
market for a very long time.
yeah,
This isn't like if you go to JD, that's a long bear market. 3 years of relentless. That's kind of like the Nasdaq, right? In
yeah,
2000, 2001. What obviously I don't trust because it's Z. So I'm saying you're really, if you're long here, you're betting that Z has a plan and he's not going to sell the stock. Like he's in it and China owns these companies. And if you want to play, you're going to have to pay up. And so that was a vicious, like we look at Alibaba, that was a vicious bear market.
yeah, for all of them, obviously, they've been
You know,
down 80,
it
90%
was
in the
down
past.
90%, right? So the K-Web was down 80% and stayed there for 3, 4 years. So, again, if these, anyways, there's a lot to be bullish on. again, whether you like China or not, and I don't like China, like you can't ignore that that's a big ass move. K-Web's a little messier, but I do think like if I look at Tencent, like that's one that I am stuck with. I bought last week, and that's a really good base. And that was also down. Wow, 80% of Tencent. It went from 100 to $20. And C, there's another one that I own in my degenerate economy, SE.
Yeah,
Look at that.
that's Singapore. Yeah,
Yeah,
right.
it's up a couple 100%, right? The gaming company and so anyways, and where's Mercado Libre? I know you would like that one, and I watched it forever. So that's kind of just consolidating around
Yeah, it's
all.
consolidating. It's normal to pull back to its 50, even to its 200-day. This is not really a stock to chase when it makes new highs. It's better to buy it on dips in
Yeah.
general.
And these are not cheap. So again,
No.
these are huge market caps, um, and they're not cheap. But you know, forgetting all that, technically the market looks pretty healthy, which we've been saying for a while now. And the rotation is good. All right, I'm going to hit the sack, buddy.
All right,
Everybody have
Howard.
a good week. Hit us up if you have questions. Talk to everybody next week.